All right, good morning. Friday. Happy Friday. So, as you can see, I titled this morning, this may be as good as it gets. That doesn't mean today, right? Or necessarily next week. Yesterday I showed you in market internals have reached an extreme. Historically, that means risk for longs is increasing. It doesn't mean today. I've seen it lead by a week, sometimes a bit more. We've already seen the NASDAQ reach a resistance area. You can see the SPX here. It may get to 4,600 where this prior high is. And so we utilize our method to objectively monitor what's happening so that we don't get caught up in our own emotions. And we're all susceptible to that and rationalizing maybe things that aren't necessarily there. Or I guess one of the most important pieces of information to realize is that when the internals start to reach an extreme together, and both of these have to meet together, and breath getting to one and sentiment not the other, and vice versa, it's not as reliable. There are other ways to utilize it, but we'll talk about that another time. However, one of the things that you wind up seeing is that you see similar patterns that work so well, and all of a sudden they start failing. And so by watching market internals as well as intermarket analysis, you'll see in the coming weeks, we'll start looking for maybe certain ETFs that look good. There are some right now that look pretty darn extended. And then you look at that and you say, these things got to pull back. And so we need to be aware of that. And that's today's message is that, hey, let's enjoy it while it lasts. You can see this increase in momentum here. Inflation is subsiding. So party hats coming on, getting back hopefully to the point where I don't know if it'll be this year or next year where they start lowering interest rates. So this is just part of what we do day in and day out, month in, month out, year in, year out. And you'll see that this has been historically an extremely valuable piece of information as long as we put it within the context of trends. And ultimately, where green bars start failing, breakouts start failing, and so on. So let's see where things are at here. All right. So 4,500 is good. Well, 450, 4,500 on SPX. It's a big sticking point. There's a lot of bets at that level. It's Friday. Even if it gets a bit above it, you could see as it poked above it momentarily yesterday, it got dragged back in again. Things are up above here right now. A little bit, you can see the cursor as I move it. It's just a little bit above yesterday's high. We do have a void below. So yesterday's low becomes our first reference point of support. Well, that's not on yesterday. Is that on yesterday's low? No, this is yesterday's low. The green bar becomes our first reference point of support here, and then we look for minor support. That's why I marked these off today. These highs that were resistance, pivot high, it pulled back, it made a higher low, and it accelerated higher, creating this, what we call a void, right? The void concept. We talked about this in MT Live this week. You can catch the recording, watch it. So this has created this void underneath. And let me, objectively point out when these reach extremes like this, it doesn't mean prices are going to crash. There are other situations that would guide us to that bias. This isn't one of them. However, it does mean that there's a high probability that things are not going to keep going up the way they have, meaning this could chop around for several months. We could get deep pullbacks. And I've marked off this minor and major support because this is one of the simplest ways of monitoring a trend. Major support is the high, the low prior to a higher high. And no matter how you draw it, connecting your dots and trend lines, when it violates that major support, it's going to violate a trend line. It has to happen. So, and once it violates that, the uptrend has been broken, black and white. So somewhere in here is where we'll measure depth of retracement. And again, this may get up to 4,600. So if prices were to move up into next week, the way they moved here up to this 460, meaning we got another bunch of bars like this, boom, 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 and we get this mini climactic, no one's going to deny that a pullback is coming. So today's message is the market internals are giving us a heads up. Price has not yet. And let's see how it evolves. So, all right. Now, eventually I got to erase all that. So pretty quiet this morning. Look, there was just a little breakout failure right here, right at just above here. We'll see what happens there. Let's go to our futures. And you can see it's a little inside bar there. Not much going on here this morning so far. You can see several bars up in a row. It's a little extended. And I didn't mark off the minor support there, but you get the idea. You got two pivot highs up there. Was resistance. Pullbacks to there. We'll see if there's buyers. And if it cuts through here, like it doesn't exist, and part of why we talk about what's directly to the left and price voids and so on. Of course, is, we explain price action. So, was there some reaction to what's to the left here? Right? So this little congestion area that it fell from, traded back below and back above, and we have a concept called it's neutralized that. Now, others are going to utilize it as a reference point, but it blasted through that. And you can see how this is accelerated. There is very much support underneath here. So we'll see, as prices accelerate that way and there are smaller reference points to the left, there's greater probabilities that they're going to hold on pullbacks. It's really common sense. All right. Let's go to SPX. Pink charts? No, Alex. No pink charts, no girly charts. I'm not against girly charts, but see what I do is I mark off some resistance to the left like that. And then I haven't done it here, I guess, or it's up above. And then I click on it. I haven't done it here, and I apply it to everything. So now, and this is part of my process. I don't use this login. It's on my laptop. So on my desktop, I do that on whatever I'm looking at. And now as I mark it off, I don't care what's on the weekly chart, or it could be the daily chart that I've marked it off on. And now on my 5-minute chart, whatever I'm looking at, this red area where resistance is on a higher time frame is shown to me. So, I've done my analysis on a higher time frame, and now I know where my reference point is on a smaller time frame. And I do the same thing with support, where there's a green thing underneath. All right. So big open interest here. Yesterday was 425. Upper side was fine. And today, Jake got 470. I have 470 down below. Yesterday's low was 89. You can see right here, this is yesterday's low, and this is the day before's low and the high. So we want to see it stay below, above 470. Now it's right here. It's not that far away, but up above last I looked, and let me look again. 45.50, I think, is the no-brainer, or 55. 50, 55. Yeah, 45, 50. And so those quarters and 50s and so on is 75 by 85. After several days up, I don't think it's getting to 45, 50. So that's the other number today. All right. NDX, same story, right? Factory work, minor support, major support. It's up several days in a row. It could go higher. It's actually exceeded this pivot high marginally. So two thoughts here. Two thoughts when I see this. First of all, here's a very large area of overlapping bars and such. Now, this looks great. A consolidation and a range expansion bar, a wide range bar. That is, first of all, look at that and say, okay, there's a power bar. The other thing is this is extended short term, a range expansion bar breakout. This is how shock patterns happen, meaning it's the unexpected, not supposed to go underneath here. I'm not saying it will, but the internals are lined up that that's possible. But when we see a range expansion bar like that, it should stay, as you know, if you've been here for a while, in the upper half of the wide range bar. Pretty simple stuff. And you can see the cursor on the daily chart. Even if it goes higher than here, as it pulls back, buyers should be in this area. It was a congestion area. It's broken out. Ideally, let me back up here. Yeah, maybe I talk too much education in these things, but one of the things we talked about was that momentum was slowing here, the distance between the highs. So what we would really like to see, I said before, what if prices accelerated higher? And now we see things are climactic. They're going to pull back. We're pretty confident about that. Well, yeah, that's true. However, if prices were to accelerate higher and they keep going up, that gives it a larger distance to pull back without damaging the chart, meaning violating the trend, that major support area. So we'll talk about this more in the coming days and weeks as things unfold. And so we look at what is, we create a bias about, short term, intermediate term, and then we adjust. All right. Interest rates. They pulled back a lot. They're into support here. Odds are they're going to move up a little bit. How much that bothers the market, I don't know. But just like looking at any chart, anything that pulls back as this did, there's going to be buyers down here. We'll see how much of an effect that has. The 10-year, that pulled back as well. And so now we've got a big red bar on the weekly chart, and we've got this big trading range. We'll see what happens in the coming weeks. Nothing's happening here this morning. Just a little narrow range bar, same wide range bar there, minor support, major support. We apply the same thing to no matter what we look at. So this is what I'm talking about, accelerating, which is positive. It's positive because it's gotten well above what was resistance. And now it could pull back. It can pull back without damaging the trend. So this was green, now it's red, and same story. I mean, you can do this on, of course, your chart. You should be able to do that and mark off on smaller time frames where your support is. Then go ahead and make little adjustments and justify, right, what we've done here by looking to the left on a smaller time frame. And you see this area of congestion here on the Russell. So if prices should pull back and they break here and they come down into this area, maybe it takes a few days, there should be lots of buyers down here. And this has a nice congestion area where it's lined up with, on the daily chart, that minor support. We looked at S&Ps, we looked at NQs. The Dow, oh, look at it sprung up here a little bit here, pre-market. But But look at the weekly chart. It's just such a giant mess of overlapping bars. Can it break out? What's going to happen? Breakout situation like this, likely to fail, as well as smaller time frame, bottom of the range, top of the range. This is just historically a bull trap kind of a pattern, to be buying breakouts. So they're saying maybe coming earnings get the key for the market correction. There's always that possibility, Jose. I mean, I've heard some fundamental people on CNBC, right, money managers, say earnings are going to be the key for the second half. Some of them anticipating that they're not going to be so good, just because, these higher interest rates that have been going on, and the consumer, while they say the consumer's doing well, I think a lot of people are pulling back on different expenses and putting money at other places. One of the things I mentioned yesterday, I think it was in the green room, that one of the things I see on Amazon where I buy things on a weekly basis is that there's deals everywhere. Forget their prime deal. Everything you look at is 30% off, 20% off, 50% off. So the competition for your money and things slowing down, how do you survive that? Well, you cut your profit margin on what it is. Hopefully you have that leeway. You have a business, you have that leeway to cut prices and still stay in business, because those that don't, they don't survive. And then if you can get to the other end of the bad times, right, there's less competition and you do better. And that's, the way it works, black and white. Or not so black and white at the beginning, when you're starting in business, but that is how it worked. Transports broke out. Beautiful. I mean, things look good here. But in the short term, we have to be aware that because of these internals, there is historically the potential for nice, beautiful bars like this for prices to come back under here. So what do? Trade what you see, but money management is always the key to getting past any points where, you get these kind of corrective things. So take it over, Dan.
Good morning. Zero DTE day, earnings season kicking off. The Dow is up because of pretty much a couple of banks, UNH, so JP Morgan, new yearly highs. Kramer was saying blowout numbers. He's pounding the table on them. And then this other analyst I heard talking earlier saying, the numbers are not as good as you think. They had some book gains from that FRC takeover, whatever. But just like Stephanie Tomboy talking yesterday, she's been bearish for a year or maybe years. If you don't, this is reality or charts. And if you want to, fight with your emotions and get in and not participate in what the charts are telling you, you're going to get run over. Let's see some other earnings here. AEHR gapping up to this prior high, 44, nothing to do. OGI, little sheepy, gapping down, no pattern. Another little cheapy. Looks like it's opening flat on 31. We'll come back. Well, it's light volume, so forget about it. UNH helping the Dow, 465. That's a big shock gap. That's a put spread watch. Put spread watch there. I'll put that in this window. That I had AMD there. AMD we put on a put spread yesterday, but it's also a directional watch with this big old double bottom. Yeah, I mentioned KRE, regional banks getting a nice gap up here. You know, we were talking about going long. We nibbled on some individual stocks in here. And then XLF also at the same time did even better. Yeah, that XLF broke out. Netflix here, we put on a 1 DTE put spread yesterday. Greg, there's your bell going off. Did you hear the bell? Hope not.
I did not, but if you set your audio like that, I wouldn't. But I'm glad you're hearing it.
Yeah, I'm glad you're not.
Right.
Because then it'd be annoying. All right, so we're gonna move stop 30-minute low. We have a 0 DTE on this. And you know, when we entered it yesterday, it kind of did a quick little dive. I'm like, what happened here? And I'm just guessing it's part of this strike. You know, the Writers Guild and another group, they're all going on strike and whatever. And you know, this thing's gapping up here for some reason. So Stadavos, UNH. Yeah, we were just talking about that a second ago. I put it in this middle chart, gapping over here. It'd be a great put spread idea. Directional, it's up a lot, and I don't have an opinion on directional yet, but put spread, sure. If there's juice, they're, you know, earning stocks, unless it's one of the top 20 liquid ones. You know, expect the spreads to be ludicrous at the open. You know, Wells Fargo. This is one we were contemplating buying call options on because it had more of a bullish daily weekly. And we analyzed it. I'm not sure if anybody did in the green room, but that would be paying off. BlackRock, you know, things that rally this much into earnings. I was actually looking to sell that 800 call spread yesterday, but there was just no juice. But a flat opening here is very favorable to short option sellers into earnings. Calls or puts opening flat, that's absolutely ideal. Citigroup put spread idea, STT gapping down. You know, 0 DTE call spread if there's anything. Wow, that's a big gap. See why I don't look at numbers? I look at pictures. This thing gapping, look at my horizontal line. That is a nasty bearish gap. Every single person in these 2 weeks is, if they held it, is holding a losing position. BIST 2680, you know, 0 DTE call spread. Well, it fits in the category of what I call, you know, catastrophic huge gap. And then I'd say, let's just see what it does. I have absolutely no idea, but I'll put it in a window. Let supply and demand tell us when to get out. All right, so Netflix we got XLF, PAN-W is a bear 1, 2, 3. And I say that's a breakout failure. Look at that. You had a beautiful closing breakout, but when things get extended like this, I tell people it's like if you're wanting to trade momentum like that, you better be on alert for musical chairs of hitting the exit. And the very next day, turn that into a 180 reversal. S wave here, I saw the up and down. This was a sell setup at the converging 20 is 50. But you know, that's a pretty big gap. Let's see if we can sell a false spread up there. Asmel, this is you know, in the classical technical analysis, you got this big flagpole, and this is what's called a broadening consolidation, which is just a derivative of a rectangle and a triangle. They're all consolidation patterns, but it's a closing breakout. You got a bullish weekly, bullish monthly. It's extended on the daily, but I'm going to keep it on my list. Ideally, it'll take another week for it to set up. Like chop around, maybe fill the gap, give us some bullish price action on support. But that's bullish. PRFX might give us a great. Look how crazy this is. Your bell didn't go off on for Andrew's NVIDIA. So that's main technology advancement. That's yeah, NVIDIA, today's Friday, Wednesday was your entry on NVIDIA. Now you've missed any low risk opportunity. Daily, 15-minute or extended.
Dan, what about a 0 DTE call spread if it, breaks a 15-minute low or something?
Sure, let's watch it. Absolutely. That's why we loved 0 DTE. We just call a higher low for the day, period. I see our Intuit down here a little bit. I just glanced at our opens, but we did sell a 485 call yesterday that expires today. So that was 100% perfect. This is a 4 long. So, we obviously manage it different. Swing trade versus core. All right, so that PRFX could set up a day trade maybe. A lunar gap breakout here to $10. Maybe 30-minute high we'll watch. This waves. Wow, this thing went up to 18 pre-market. Something is definitely up with this little guy. Light volume. But this looks like a pump and dump over here. But man, $18 blew through this. Humana I saw up, I'm sure just on the heels of UNH. CCJ, McGraw asked me about this. And your bell worked that time. So why sometimes I'm not up? Just figure that one out.
Well, the Gibby effect. I don't know, Dan.
That's just nuts. All right, so McGraw asked me about this. And I said, pullback. It's bullish daily, weekly, monthly. We need a pullback, just like that broadening thing I showed you. Amgen alarm. Beautiful double bottom on the weekly. Look at that. Yeah, McGraw, I'll say, yeah, give me the numbers. Sure. So Amgen, big old bottoming pattern daily, double bottom weekly. That's a long idea. And you're asking about MJ, Michael Jackson. We're in this. We started nibbling on this in YOLO, because buyer beware. This sector, loves to disappoint. Alex, your Tyson would be a beautiful 1, 2, 3 if it sets up for Monday. Leslie Pools is not having a good day. Let's see what Pool is doing. Wow, Pool also down. Man, that's a big old gap. Twilio, I posted last night, is a core